debt specialist Paulvia Shiburi is urging consumers to scrutinise their loan contracts thoroughly before signing. There are concerns that consumers end up in deep financial problems in tough economic times and fail to check their agreements with lender properly.
Once you apply for credit, you don't look at the terms and conditions. People primarily look at three things. How much am I going to be paying on a monthly basis? And then how long will it take? All these, and of course, the interest rate. Those are the only three things that people look at. But what actually are we paying for? I always say that in the installments that you're paying for, you know that you're paying an X amount towards your car repayment. But remember that there are certain things that are calculated in that car repayment that you still need to be aware of. And I mean, we recently with one consumer, and then we said there was a value-added products there, and then we wanted to make sure, do you want to keep them, or so that we can further lower the installment? And he said, I didn't even know that I had all of these things there. And so it's really about sitting down, going through that contract and understanding what does this come with, especially also with your loans as well. You know, there's credit life insurance. People don't know about that. And when they're in trouble, they can't actually go back to the bank and say that, look, I need help. I'm not able to pay my installment. What can I do? Because I believe you've been paying credit life insurance in that installment, it's already pre-packaged and you are now in trouble. That should come in handy and assist you with your situation if you're not able to pay. But if you're in arrears, that's a different story altogether. However, I would say that consumers really need to look at their contracts thoroughly. A lot of people will get phone calls to say that you qualify for credit, and I always say that don't take out credit because you get a call saying that you qualify for it, because when they look at your score, remember you could be in a position to qualify for it, but it doesn't necessarily mean that you can afford it, more especially in the long run. Remember that such things as dates, it's an agreement that will go on for the next year, for the next 2 years, so that means that you need to be prepared as well to pay for that agreement for that duration of the period. Now, should something happen and you're not able to pay the contractual agreement, then this is where it becomes a little bit complicated. But I always say that now, just you know, also as consumers can also work hand in hand with debt counselors in terms of really trying to investigate reckless lending, because that does happen, you know, where you find that you've got certain accounts with bank A and they would call you to take out more